As a former financial advisor for several Wall Street investment firms, I saw an abundance of wealth among regular people. People with routine 9-to-5 jobs earning ordinary incomes using investing to create substantial wealth. This experience left me with confidence and inspiration. If they can do it, we can too. Everyday people like us can tap into the power of investing to exponentially grow our wealth. In this video, I'll show you how long it's going to take to reach that $1 million mark and how much you need to invest along the way to get there. But more importantly than that, I'll help you have the confidence that investing is something that you can count on by looking at facts to help us overcome fears that hold us back. For those of you that don't know, the S&P 500 is a basket of 500 of America's largest companies grouped together. You can purchase all 500 of these through an index fund or an ETF. This basket has historically returned an average of 10%, and in the last 10 years, it's been higher than that at about 13%. But for these examples, we'll go ahead and stick with that 10% number. And of course, we got to adjust for inflation and all that, but let's just think real numbers because it's the easiest to comprehend. Now I'm going to share my screen with you as we jump into some calculations. If you invest $100 per month, it'll take 45 years to reach that $1 million mark. And when I'm going through these charts, take a look at the difference between the green and the blue here. The green is the total interest or growth that you've seen. The blue is the amount that you've put in. So if you did this, you would have only put in $54,000, but you would still earn $1 million over time. This is the huge power of investing. If you did $200 per month, it'll take you 38 years to reach that $1 million mark. $400 a month, you get there in 31 years. $800, 25 years. If you could do $1,000 a month, you'll reach that $1 million mark in 23 years. Again, look at this chart. You can see that you've put in $276,000 and $790,000 of this $1 million is from the market returns. $2,000 a month, you'll reach that $1 million mark in 17 years. Now you might be thinking, how is 10% even something that I can count on? So let's get into that right now. The companies that are the largest 500 rise and fall to be in or out of the S&P 500. So that's how it makes sense logically over time that this is going to be something profitable, because bad companies or companies that are losing money and not growing anymore, they start to fall to the bottom and eventually out of the S&P 500, whereas up and coming companies go in and eventually to the top, creating continuous profits for that basket specifically. 10 years ago, the top 10 companies in the S&P 500 look completely different than they do today. Even though markets move up and down throughout time, if people keep buying and consuming products like we do, then that money is going to different companies, and those companies are figuring out how to profit from it. And us owning the S&P 500 is a way to tap into that growth. So we just want to start thinking logically about this, because regardless of what's going on in the market, people are consumers. And that's going to trickle down to us being earners and benefiters from the S&P 500 growth. All right, we have to talk about this saying that I hate so much, and it's never invest anything you can't afford to lose. This saying makes me just cringe, because I think this saying alone holds people back from investing altogether, because of course nobody wants to lose their money that they've worked so hard for. So when you hear things like don't invest anything you can't afford to lose, it puts the thought in your mind that chances are very high or likely that you're going to lose money. In reality, it is the exact opposite. This right here shows the returns of the S&P 500 year by year. So you can see there are a lot more green years than red years. And those red years, usually it's just 1, maybe 2 years, and then you go back to earning money. Now, if you look at this chart, it shows you how very unlikely it is that you actually lose money when you're invested over a long period of time. The longer you go, the less likely it is that you're going to lose money. Okay, now what about the economy and the market and all the crazy, terrible things that are happening in the world? Of course, you would think that this is going to affect the returns of the stock market. Sometimes it does, sometimes it doesn't. Here's a chart that shows different time frames and how there's always something going on in the world, but yet the market still grows, or at least bounces back from a big loss. Even during 2020, when the global pandemic happened, we still had a profit profitable year in the stock market. If you think about it, it makes sense because there were companies that really thrived during that time. There were, of course, many that didn't do well, but when you're investing in 500 companies, there's gonna be a good mix of the good performers outweighing the bad performers. Now, for what if I die before I even get there, I know it's incredibly hard to think of yourself 20 or 30 years from now, but myself just crossing 40, like I can vividly think back to when I was in my 20s and how old I thought 40 was. But now that I'm 40, I'm like, I'm thriving now. I'm finally not struggling. I've finally figured out my life for the most part. I'm stable and steady. And that's really what I want to help you with, because time is going to pass. You are going to get older. So let's just look at life expectancy charts. This is my next thing because it's very likely that you are going to live. As crazy as that might sound, because for some reason people think they're gonna die before they get in their 60s, but most people live until they're in their 60s and 70s and 80s even. Now, of course, there are quicker ways to becoming a millionaire, and this might not be your main path, like starting a business, increasing your earning potential so that you can make more money and enjoy more of your money. That is going to help you have a more rich life while you save for later. I like to think of investing as my backup plan. Like, I'm working on growing my business. I'm working on day-to-day things to have more wealth and abundance now, while also in the background investing for later. So if you think of it more as a backup plan, because instead of thinking like, what if I don't make it, you really want to think, what if I do make it? And statistically, like we just saw, you are very likely to make it. And if you make it into your older years, you're going to want to have some money, because it's just going to let you kick your feet up a little and relax and chill and have more fun and less work. If you think you don't like working now, you're definitely not going to like it later. Now, if you're still uncertain about investing, like which accounts to use, how to determine your investing budget, I created a 4-step guide to get you started that you can grab for free in the link below or in the description below. If you want to learn more about investing, take a look at this video next.